to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Ken Van Leeuwen, founder and managing partner with Van Leeuwen and Company. Ken, it's great to see you as always. Welcome back to Trade Talks.
Nice to see you, Jill.
All right, and Ken, we talk about estate planning throughout the year together. This is a really critical part of the year because we're looking at year-end planning and how to manage some of those taxes and charitable giving. So what's on your mind as we get into 2022 and prepping for this?
Well, one of the key things, Jill, that we're looking at, of course, for our clients is what we call tax loss harvesting. As we know, this has been a very relatively good investment year, but also somewhat of a very volatile year. So please look at your accounts and determine what your gains are, your realized gains. And then if you have losses in your accounts, please take those losses to offset some of the capital gains that you have. And make sure you look at even mutual funds, because mutual funds currently are paying their capital gains as well. And if you don't know what they are, call the fund company, call your advisor to determine what those capital gains would be. But again, this is a very simple thing to do, and make sure you look at all your taxable accounts, not just one account.
Right, and Ken, I noticed in your notes that you mentioned being cautious of tax loss selling in underperforming names. What do you mean by that?
Well, what normally happens is this is a wonderful time of the year for a lot of reasons. But from an investment perspective, sometimes the stocks that have done poorly, Jill, in 2021, for example, are excellent buys at the end of the year. It's a way to give yourself a gift where you can buy things sometimes on sale. Like last year, for example, as we know, last year oil stocks were one of the worst performing groups. If you had bought oil stocks at the end of 2020, frankly, it's the best performing stock group in 2021. You could have given yourself a great gift. So be a little mindful of that also, and weigh the consequences.
And that's a great point that you make. And let's talk about something even a little bit longer term, the lifetime estate tax exclusion that's sunsetting December 2025 at the very end of the year. What does that mean for us?
Well, what that means is that now what we're looking at, right, is we know that right now in roughly that's about $11.5 million we receive per person. So a husband and a wife basically has estate protection for about $23 million. In 2026, on January 1st of that year, estate taxes are going to right now drop to $11 million. So again, you're exposed, God forbid if you pass away in the next couple of years, you're okay. But if you pass away after 2026, your family could suffer a higher tax penalty if you don't plan accordingly. But again, Jill, that is always one of the big issues that Joe Biden talks about is the estate planning, because of course that is tied to wealthy individuals. Many people don't fall under that, of course, but again, it's an issue that people should be very mindful of, and they should be doing, if they can afford it, make gifts to their families, make gifts to charity at this time of the year, and we see a lot of that happening right now as well.
Right, and Ken, do you have any tips in terms of giving to charities? Because to your point, you're just inundated with whether it's text messages or email of people asking for money. And there's just so many groups out there, many of them doing fantastic things, but you do have to be careful when allocating where your money goes, because sometimes it isn't going exclusively to the charity.
Well, there's definitely sources on the internet, Jill, that will tell you how much of your dollar goes directly to serving the mission of that charity. I would make sure that you look at those, do research to make sure what's the percentage of that dollar that goes before making your contributions. Again, though, whether you're making it to your religious organization, your university, many people do, special charities, if your heart is in making a gift to that, then necessarily that might not be the biggest driver of what you're doing. Again, but make sure, if you're not sure when you're making a gift to a charity, check out some of the facts about them on the internet, because they are required to tell you what's the percentage of dollars that actually hits the street. so to speak, in terms of what they're doing.
Right. And let's wrap up here and get some of your thoughts going into 2022 with the market outlook. And Ken, I would imagine that the inflation conversation really is going to be one of the key drivers as we kick off the new year.
Well, okay, very much so. We just saw the report today. Little eye-opening, to say the least. What's really important to us next week, Jill, is what the Fed is going to be meeting next week, and what is a result of what the meeting is going to be. The question is, a couple of weeks ago, we were expecting an interest rate increase in September. Now it's been recently moved till May. Of course, interest rate increases slow down the prospect for economic growth, thereby decreasing inflation. But are we going to see one sooner? The market thinks May. With our numbers today, we have to be very cautious about that inflation conversation and interest rates. So we're being very mindful about that as well right now.
Right. And what else will we be looking at as we go into 2022?
We're actually looking at, frankly, I still think there's this pent up demand in certain industries. We saw Costco's report yesterday about how well Costco's doing. People want to get out, Jill. They want to go to the store. They're tired of while they love online and they love the convenience, they want to get out and shop. People want to get out and travel. This new variant, again, holds people back, some people back. But again, people want to go out. They want to go on vacation. They want to go to Disney World. They want to, for us people in the Northeast, we're going to want to go out and get some sun in the winter time. So I think that's a big deal. Again, there's money around. People have money. So they'll be spending. There'll be economic activity, to be sure. So, and will it run too hot from an economic activity perspective? That's the question that we always have to be mindful of. And that's another reason why the Federal Reserve may want to try to slow it down a tad.
All right. Ken, we appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Great. Thank you, Jill.